So if we can all line ourselves up for the next panel. And today, this next panel, of course, will be talking, I say of course, you might or might not know it, but financial and commercial inclusion. Scale big, scale fast. So I'm going to invite Motlhabane Koloi from StartUpBootCamp to join us on stage. Now, Motlhabane will be moderating this. You can put your hands together. We can start practicing. There we go. Wonderful. Anton van Vlaanderen. Did I get it right, Anton? 4DI. Whew, they do some really good stuff. Louw, Barnardt from Outsourced CFO. Anton Kleingeld from Old Mutual. You work for Old Mutual and your surname's Kleingeld. I like that. And then James Townsend Rose from JUMO. Great to have all of you here. The panel all yours, sir.
Awesome. Thank you so much, Kino. Thank you to everyone who's here today and to the panelists. I'm really excited to hear your insights and your thoughts about financial inclusion on the continent and particularly scaling that for the impact that it has unlocked for the continent so far. Welcome everybody. My name is Motlhabane Koloi. I'm from StartUpBootCamp, and I'll just like to let the panel introduce themselves briefly, and then we get into it. Awesome.
Which side do we start?
Start a small change.
Hi guys, my name is Anton Kleingeld. I studied as an engineer, but clearly I was a pretty crappy engineer and moved over to strategy at Old Mutual. So I head up a small team that looks for strategic partnerships and alliances, and more we're leveraging the team to establish partnerships with smaller companies to drive innovation for Old Mutual, because driving innovation inside Old Mutual is very, very difficult to do, given its size.
Great. Okay guys, my name is Louw Barnardt. I run a company called Outsourced CFO. It's basically a CFO services and cloud accounting company that's aimed at your small and mid-sized type companies, just outsourcing the finance function and bringing technology into the companies to help build scalable financial infrastructure.
Testing. Yeah. Just like to start by congratulating South Africa on the win 10 days ago. Yeah. My name is James. I have held various positions at JUMO. Most of my time there has been spent managing the teams that are responsible for our M&O partnerships, but more latterly I'm responsible for our Africa operations, which includes our in-country teams and the business development, so how we're scaling within Africa.
Hi there, Anton van Vlaanderen. I'm a partner at 4DI Capital. We're an early stage VC fund based in Cape Town, and we've recently started investing outside of South Africa into Kenya, and we've made an investment in Zambia as well. Yeah, I think that's...
Awesome. Thank you so much, guys. So the first question, I think, James, you'll be able to answer this, is let's look at the successes that we've seen in the past in financial inclusion, and particularly that have scaled rapidly, exploring the factors that contributed to all of that.
Sure, that's a big question, but thanks for the tee up and an opportunity to talk about JUMO. Yeah. So for those of you who don't know, JUMO is a financial technology business. We partner with mobile network operators as a distribution channel, and banks and other financial services to bring low-cost financial services to previously unbanked. In terms of our successes, on paper we launched 4 years ago, so we're still a relatively new business. Whilst we are headquartered here, we don't operate here. We operate in 5 countries in Africa. It was 6, but we've pulled out of Rwanda due to data localization issues. And we've recently moved about 18 months ago into Pakistan as our first non-African growth country. We've got 4 more countries in the pipeline, Côte d'Ivoire, Cameroon, Nigeria, and India, all of which are expected to come online in the next 12 months. High-level numbers, we have dispersed over $1.5 billion across our platform, and last week we hit our 15 millionth customer. So all that in numbers kind of rounds up. It will give us a view of our scale to date. I think if there was a case study for successful scaling, JUMO might be an example, but to add a whole big dose of reality and humility, it would also be a case study for a lot of the pitfalls that one can fall into when scaling. And we have made some mistakes and errors along the way, of which we hope we have learnt a lot from and applied to future growth. But plenty to discuss today about some of those mistakes.
Awesome. And Louw, from what you've seen, what are the trends that we're looking at when we're looking at financial inclusion? What are the where are we moving to in that direction?
Yeah, I think from our side, we're particularly excited about the kind of cloud adoption among SMEs. So internet access across the continent that's rapidly scaling. We just saw, the townships getting free internet from Google just the other day announced here in South Africa, and there's more and more initiatives rolling out like that, giving your average small and mid-sized business owner on the continent access to the internet. And then with that comes adoption of cloud technology that is just disrupting the way business systems and financial systems used to run. So for us, from an accounting and finance perspective, I think it's really exciting to see cloud accounting coming in as the heart of the small business finance function, and all of the things that kind of creates. Better financial reporting lowers the risk for the business owner, for the financiers of those companies, like your Antons of the world. If they have proper financial information, they can actually see what's happening in the business, instilling a bit of trust in a landscape where trust is lacking. So I think that definitely that rolls out across operations and funding as well is very exciting.
That's fantastic. I mean, looping into Anton here, we've seen a lot that's happening in terms of globally when it comes to financing startups. And 40i also approaches, the investments in looking at, what are they doing. What are the methodologies of financing that differ on the continent, and also for South Africa as well, that allows for financial inclusion to succeed as it has over the past few years?
Yeah, I think for me there's a few gaps at the moment, and one of the big gaps we're seeing in South Africa is in the angel investing space. So obviously in the US, the angel investing is big, and I think also maybe in other more developing countries like India or Latin America. And what we see, especially in South Africa, is you get your privileged sort of founder is sort of bridging their businesses with the 1 to 2 million rand that they need to get to the sort of institutional funding stage where they can come talk to us, and where that sort of is lacking, and I think there's a big gap there. Also, I think what we also see a bit is sort of private sector not really staying in it for the long game, which is a bit concerning. Like, I think corporate South Africa, I'm not having too much of a bash, Anton, but basically, the in and then the out, and I think it goes a lot on to do with, I don't know, I've never worked in a corporate, but I suppose it's a lot on quarterly results where I think the startup kind of game is a long-term sort of decision. You've got to be in it. You can't. It's lots of ups and downs. And then I think just for Africa, we need exits. We need successful stories. No pressure. But yeah, I think that'll start getting the whole flywheel going, and then we can start moving.
And thanks for that. I mean, going to Anton as well. Like, what is happening in corporate South Africa that either is not accelerating financial inclusion, especially from the startup perspective, and also from your perspective with working in corporates, you're providing insurance for multitudes of people, but financial inclusion is one of the core targets of the UN SDGs. So what needs to happen from a startup perspective and from a corporate perspective for us to scale rapidly?
If I knew the answer to that question, I'd be a very happy man. It's very complicated. So I think Anton makes a very good point in that so many things need to align for mutual benefit to be created between a startup and a corporate. The timing has to be exactly right. The goals need to be so well aligned. And what we often see is, my team will do its darn best to try and get a POC or a pilot done with a corporate. It's very, very hard to execute. And I am honestly, asking questions around whether that corporate startup model even works. I think there's space for it to work in a very, very bespoke environment, but making it work in sort of the standard manufacturing production environment, which characterizes most corporates, you're going to kill it. And that's exactly to your point, Anton, is unless it can show benefit in a year or two, it's out, because it'll always drop down the list of priorities. It can't show IRR, and therefore it can't get funded. It's simply how the business makes decisions, and you can't blame the business for that. So I guess the magic question there is, how do you create that environment? And we're still struggling to get our heads around that.
And I think partnership is very important. I think it's sort of the theme that's sort of happening. But for me, it's an opportunity for the startups, because people like Old Mutual have a lot to lose by making mistakes in the market. Like this big reputational risk at stake. But a startup has got nothing to lose. So in terms of bringing a new product to the market, I mean, it either works or it doesn't, and if it doesn't, you start again. So I think also what I've seen also in corporate, we've also got a corporate VC fund, the sort of the attitude to failure, and I think it's not just in corporates, it's a general thing in South Africa. I don't know about the rest of Africa, but failure is very frowned upon. I was in Silicon Valley earlier this year, and failure is sort of accelerated. And I think that's sort of something, as Africa, we started changing our mindset on.
James, I mean, talking about failure and startups, and JUMO has done well in succeeding. You earlier mentioned that you are pulling out of Rwanda. How's that iterative process of learning and scaling in the build, measure, learn, the whole build, measure, learn cycle? How are you deploying that, and how can we, bring other people to be aware, or other stakeholders in the conversation to be aware that this is a startup journey and this is an easily adopted, methodology?
I think, for me, that is inherent in the company culture. As a startup, how you build a team and promote a team and make failure acceptable within a team. And certainly within the initial stages and growth stages of any business that's growing fast, there's going to be a whole heap of failure. A personal point from my experience is a requirement of rapid expansion is to delegate responsibility down into the smallest possible units. And in order for that to work, leaders have to take accountability for their subordinates failing. And that, for me, is one of the key elements of how a business copes with failure and builds trust in the teams vertically to handle that, learn from it, and move on without pointing fingers. Just going back, or linking it back to the previous comments around partners, we work with big mobile network operators and banks, where their view on what is failure is very different to our view, and we that is why over the last 2 or 3 years we've spent an inordinate amount of time working on our onboarding process, where we try and align the culture around the partnership up front and make that a foundation of the partnership. So it's more than just alignment over common goals. It's actually about how do we establish the relationship up front that's going to deal with some of the challenges along the way, and making sure that we're aligned on those to enable success.
Fantastic. And then Louw, I think we talking through the partnership model. You have established your business requires partnerships to basically succeed. How can we leverage those, particularly in scaling, rapid growth and scaling financial inclusion?
Yeah, no, absolutely. I think it's critical for younger companies and bigger business to be able to work together. There's a lot of complexity in that. A lot of our clients are small, small and mid-sized companies who either have corporate clients or corporate investors. So it creates a complex ecosystem. But if you can actually merge partnerships, there's a huge amount of value that can be created. Just a little example, maybe from our firm itself. We've been working with the likes of Investec over the last couple of years to build out a fundraising program for scaling entrepreneurs. A partnership that's created for the benefit of the entrepreneurs, but where there's a corporate and a small mid-sized company working together to start accelerating the ecosystem and actually help raise capital for entrepreneurs in a space where raising capital in SA and I guess Africa in general is quite a complex matter. There is, entrepreneurs aren't necessarily funding and investment ready, and also then that slows down the flow of capital, of which there isn't a massive amount compared to some of your more sophisticated markets. Complex matters.
Yeah. Can I jump in on that as well? I mean, Old Mutual has established a sort of a 500 million rand fund called the Enterprise and Supply Development Fund, and it's basically the money. It's a deal that we made with Treasury about coming back, from a big mistake we'd made in our London adventures. Okay, so this money is available. But what we're seeing, often we're struggling to actually spend the money because either guys come to us that simply are too young, and I see that in my team on a daily basis as well. And so then there's a question around how do you get a team that comes to you that definitely shows promise to a point where you can invest or co-invest with very smart people like that? Or how do you find startups that have a bit of a track record? So we participate in accelerators and incubators, both in South Africa and globally. And our biggest frustration with what we find on the continent is that the startups don't yet have sufficient traction to be able to scale properly, present the necessary documentation around a light DD. So I mean that's a big problem I think in the country. When you go to the US, speak to any startup that comes to you through plug and play or Techstars, and a lot of them already have that. And so it's working with them is sort of like literally a plug and play solution. And in Africa, I don't think we're there yet, and I don't know whether it's the ecosystem or just the amount of money available, or whether we need to work more on formal programs to incubate these guys further than just a 3-month accelerator. I don't know what the answer is, but we need to start thinking about that very actively.
And Anton, just coming to you, and I think it's also going back to the to funding. What normally would you, from a VC perspective, say you would actually look for when you look at funding startups?
You mean what do we look for in terms of? So I think obviously it's the normal things, the people, which is a big thing, and obviously experience, track record. Is sort of the chemistry between the team, then the product, and then the market. So those are the 3 sort of main things. But going back to what Anton was saying, like I think as well, we see that problem a lot. Like we have to do a lot of cleaning up, and that's what a lot of our job is actually. And we always say to ourselves, like, these guys want sort of funding in startups, but they're not ready. They haven't got themselves ready for funding, and I think there's definitely a gap there because when you're getting funding from an institutional VC like ourselves, we're working on so many different investments at the same time that you start getting a bit tired of, like, if things go on too long, then it's a big risk. And guys, I don't think guys always realize that. So yeah, I think it's quite a big topic.
And I think this is when my own biases come in. But like, where do we see like incubators? You mentioned plug and play. So incubators and accelerators, where do they play? What role do they play in that model to help accelerate the next the next startups in this to get funding?
Are you looking at me? I don't know. I don't know.
I think a big thing is like. I think a lot of focus is on getting the funding and the pitching, and I hope I don't upset too many people in the room. But like, it is a lot on the outside stuff. But like, you've got to look at the inside of the business as well, and what's going on behind the scenes. But I suppose a lot of what the businesses you're talking about are really early. There's not much there, but you need to start getting those kind of ideas in your head as to how you're going to grow out your business, how you're going to structure it, how you're going to, and all those kind of things before you go to an institutional investor.
I think there's a couple of layers there. I mean, we have to create a culture of entrepreneurship on the continent and in South Africa, absolutely. Like, so there is a place for those early stage incubators where it just gives you the ideas of forming a business or the early input you need to start a business. If I may, we started out at the Barnardt, at one of the oldest tech incubators in the ecosystem, and we got 6 months worth of free desk space for 2 guys in a desk. As well as internet connectivity and a couple of mentors who could teach us about marketing and sales and the things us finance guys would know nothing about. And that's been invaluable for the process. But then also, if you look at the 20 people who were in the room, there's only one business left at the moment, but everyone else has gained something in the process. So I think at an early stage is definitely a big role to play. And then I think, as Anton mentioned now, getting to scale, getting to proper companies that are investable at a corporate level, there's a lot of work then in between. Once guys come out of these early stage programs, they must go and first create a proper business, get the clients, put the systems and the team you mentioned now in place, and build a good company, and then you go to investors. Then maybe investors will also start coming to you once you've got that great company built.
I like that.
Awesome, thanks, guys. And the next question, I think, what we've seen with innovation and technology around financial inclusion is, it's scaled very fast, and Africa is one of the biggest, contributors to that. What are we doing, particularly now, to address the disparity and using financial inclusion as a tool to address economic disparities that exist?
So I'll take a couple. I'll place a couple of comments on that. So I think Old Mutual acknowledges that you're not going to change anything around financial inclusion unless you take a very holistic view to this thing. I mean, clearly what we ultimately want to do is to make sure that everybody saves enough to be able to safeguard their well-being, both financially and for their family, over a long period of time. But you can't do that unless you place very clear building blocks in the way. And one is around financial education, doing that really properly, doing it at as many levels as possible. Access, we struggle with access. A lot of our financial education is done in rooms like this, but really getting it out to people on mobile phones, gamifying it so that the content is very engaging. That's something that we're starting to work on. And then it requires companies like ourselves to really think differently about specific areas where we want to make a difference. So we have a fund called the Masisizane Fund, where we specifically try and assist people who, from specific groups, so Masisizane, I think, focuses on the youth, women, and disabled people, and I think they've dispersed more than 500 million people. So be targeted in what you want to do. And we've also launched recently something called HEFSA, which is the Housing Impact Fund in South Africa, which aims to provide home loans to guys that are low-income earners and don't have a great credit record. Banks and even people like ourselves expect people to have really, really good credit records because you're going to give him a 20-year bond. But, I mean, James, these credit records go up and down. And so really thinking differently about the information you need and the decisions you make, that's also a very important factor for us. Yeah. I mean, that's what I wanted to add.
Maybe just to jump on there and give my perspective as well. I think you've absolutely nailed it on the education piece. We have something we call customer operating principles, which is essentially how we think about and how we treat the customer. And in education is a big component of that. I think selection of the right partners is absolutely vital. In order to bring financial inclusion in all markets, the tech startup has a role to play, but we rely on big institutions as well, and will do for a very long time, whether it be, in our case, mobile network operators, but likely that financial institutions will have a role to play. They sit on the license, they have the relationship with the regulator, and big balance sheets, and then obviously the government as well. So, for us, it's about building those partnerships in country, but staying true to the customer at all times to ensure that they know what they're doing, or they are educated on the financial services that they are being offered, and we are not forcing them into a situation that they don't want to find themselves in.
And then looking at the plethora of key stakeholders that play into it, is it just skills that we also need to include? Like I think Anton was saying, what are the contributing factors as well that need to come in for us to expand from just financial inclusion to inclusion as well across the board?
Look, I think we have, we operate in a country with very special dynamics, whether they're socio-economic or political, call it what you want. And on a continent that displays a lot of that. And so I think we have a slightly bigger responsibility to think about responsible business, sustainable development, call it what you want, in very broad terms. I mean, my experience in Old Mutual again is that there is so much money available that corporates either have to spend as part of their CSI budgets or commitments to government or to national treasury. There's so much money available. But what I'm seeing is a lack of, orchestration around where that money can go. Because guys who come to ask for the money, you know, it's little itty bitty money. You know, maybe Anton, you guys have a different view, but I think there's a heck of a lot of money available. I just don't see it really flowing to the right places.
Yeah, I think it is still quite. I don't know. I think it's quite early in sort of the. I mean, this whole, well, from my side, the startup sort of scene is only about 10 years old in Africa as such. And I think we've got a long way to go, and it's part of the cycle. I think when the whole sort of snowball starts going and people start showing success stories like JUMO, and there's more of those, then it will get a bit clearer as to where you want to put your money and who, like maybe who can manage it, or and the players will come out. So I don't know. I think it's all part of the process, the learning process for all of us, I think.
If I can build on that, we had a gentleman called Hans from Sweden here the other day for Cape Town Founders Conference last week, and one of his big deals was the Spotify exit of €1 billion that they did, I think 3 or so years ago. And he said he's moved his family to South Africa now because he believes South Africa might be where Sweden was 15 years ago when they started all of their funds. And he's now raised 9 consecutive funds, closing in at about €1 billion per fund. And they are finding deals for those kind of funds to allocate there. And he says the ecosystem is 15 years old. Like they were some of the first guys to ever invest in tech there, and some of the first tech startups that really gained some traction from the region came from that. So I think we're in for an interesting time because there isn't a lot of growth in the developed markets right now. So people are going to have to look at Africa as an option.
I mean, we're definitely seeing it. Like in our sort of business history, we've never sort of been. People have never come to us to ask for money, or to give money, kind of thing. And the first time we're seeing people coming to us which I think is interesting. And it's sort of maybe the start of the flow of money towards the continent.
I think one of the trends we might see is just the increased use of non-traditional data sources to deliver what has historically been a traditional business service. So, you know, insurance, loans, services, you know, all through pretty much every part of inclusion, whether it be financial or otherwise, and more companies starting to adopt or think about how do we access or provide our services to the next billion when those billion don't necessarily have the, you know, government-backed credit score or a street address or a smartphone. You know, we have to be inventive about the data that we can access. And I think some of the tools provided, you know, cloud computing services, improved AI, allow companies to do that in a much cheaper way and start to bring the economics out of it and develop new business models to service that next group of people.
Awesome. So just concluding remarks. What do we see happening going from now on? What do we need to do? Key takeaways or action points?
Can I go last?
Yeah.
You go first.
I'm going to go something we haven't discussed it today, but just from my experience of trying to bring JUMO and the JUMO business model and develop partnerships in new countries, I'd love us to see increased unity amongst the different governments and regulators on the African continent, and I know that's happening in some areas around trade. I'd like to see a stronger African Union, and I'd like us to allow governments to think about making it easier for companies to operate across all the countries. I think to build and grow a company in Africa to scale is a challenge from an economic perspective for that very reason. Each new country adds huge incremental cost. I'd love to bring that down by standardizing regulation, standardizing data regulation, you know, signing up to one compliance standard. You know, there we go. That's my dream.
If I may, then I think. Oh, sorry, lost the thought there, Anton. You go for it.
I think from my side, I mean, obviously linked to our game, we need to see some success. We need a VC fund to really work and really on the continent to really show tangible results. And I think that'll start attracting more obviously funds and get the whole thing going. And I think that's important. So there's been an inkling of good exits and stuff, but I think we need to see it on a proper scale.
We're working with the gents who exited the Get Smart now on a new venture that's rolling out, say in the same space. So it's cool to see like some of the second-time founders now coming into the market, bringing serious money back into the ecosystem. I think that is really where the wheels start turning. You mentioned just the compliance landscapes. It's so difficult to build a company in Africa. You have to be so resilient as an entrepreneur team and as a business as a whole. I think we build really strong entrepreneurs that are really super resilient, that can tackle global challenges if we've got the right infrastructure. So I think the needle is definitely moving in terms of creating opportunities for us to build world-class companies on the continent that can play at a global level.
What I'd like to see, I mean, clearly what we're seeing is everybody jumping into the startup game, whether it's startups or accelerators or incubators, and everybody's fighting for a little slice of the pie, which is great because it builds an ecosystem. But I think at some point, networks are going to have to be formed, and people are going to have to start pulling in sort of the same direction to at least start demonstrating some early successes. Because I don't think by all these players now coming into the market that you're not helping towards building SA as a destination where successes come often.
Okay, awesome. I'm going to open to at least 2 people to the floor, and then we're going to wrap it up. If there are any questions on the floor, gentleman at the back, and then the gentleman at the front.
Thanks. Ian Lessam from Hawaii. We're a Cape Town-based venture capital firm. Just sort of statement / question for Anton Kleingeld. He seems like a super nice guy, so I don't want to say anything that's too mean. But I mean, it's
unless you
interesting
give me shit.
You say you struggle to deploy some of the funding or to implement the POCs, etc. So it seems like it's a very South African thing where corporate says, well, if we're going to innovate or fund innovation, it needs to be from inside. Whereas if you compare that to, and I hate to compare it to the US, but companies like, let's say, AIG, which is probably bigger than all our companies except for, say, NASPA's, they don't appoint internal people to do it. They go to an Anton van Vlaanderen, and they say, right, you are in this space, we're going to trust you, we're going to invest in your fund, and you are going to find and incubate the right startups. All we ask for in return is a bit of return, and we first look at the company once it's mature. And it's not an old mutual thing, it's very much, if you look at pretty much all the blue chips who rightly, as you say, do have an innovation strategy. They don't outsource. They believe we can do it the best ourselves, which I don't think is necessarily wrong, but I don't think it's necessarily right. I mean, your kind of view is very much on an old mutual hat, and you don't see what you don't see.
But I can definitely see that changing. So, I mean, guys like Nedbank have their own VC fund who are pushing innovation to their corporate clients through the guys that they invest in. Standard Bank funds, Founders Factory Africa, which is, I know the FFA guys, and they're very, very good. So there are a couple of examples where this thing is getting going. But I can tell you now that how corporates allocate capital or cash for stuff like this, they don't like to do it unless they're sure that they're going to get their return. And so they don't yet think about solving this problem on a portfolio basis. Every single investment has to pan out. Instead of saying, let's at least make sure that 1 or 2 of the 10 that I'm investing in is the big one. Corporates don't think like that yet. I think that's the problem.
Yeah, that's true.
And
Did
then
that
one more
answer your
question?
question? Okay.
And then the last question.
I was just wondering, Anton van Vlaanderen, investing in Africa, how does one repatriate your funds? And also, just generally, in terms of foreign money coming into South Africa from foreign investors, are they able to repatriate their funds? And then tagging onto that is we do have a big lack of angel investors in South Africa. And that's probably because a lot of our angel investors that would be are afraid to keep their money in South Africa and it's sitting in London bank accounts or American bank accounts where it's safe.
Yeah.
Doesn't it make sense to have a foreign fund which kind of invests angel investors' money in South Africa as a way of protecting it?
Yeah.
And
I like that.
Yeah, there's quite a few questions in there, quite a few topics in there, but I don't want to get too involved in exchange control and all that, but it is a problem, even bringing money into the country, and it does hamper things. I mean, what we've seen is it actually scares away money in a way, and it's actually crazy. We're shooting ourselves in the foot. But then on the other hand, we've seen, like we've invested in Kenya, where it's really easy to bring money in and to invest, and we've seen the opposite happen, where sort of startups have got hold of easy money, and there's a lot of money. There's very few startups. So you've got this crazy situation where you've got lots of money chasing few startups, very high valuations, probably double to what you've got in South Africa. So there's sort of there's a balancing act to play. But I think somebody mentioned it here, but we need to come up with sort of an Africa-wide sort of regulatory kind of stance on this, because we're all just trying to do our own thing, and I think we need to come up with a strategy that is good for Africa, because it's at the end of the whole thing with this, especially financial inclusion, I think is everyone has to partner. You're not going to have one winner in Old Mutual being the winner. Everyone's going to have to do this together. So I think we've got to start taking that approach. I don't know if I answered the question. There were quite a few there. So.
Okay. Going to have to leave it there, gents.
Yeah.
I have a massive announcement to make. There is lunch available. So I want to thank all of you.
Thank you.
And if you can just, once you're done, the microphone's at the back. And coming up at about 2:10